Good day, everyone. This is Patrick from EasyFX Code Trading System, and this Saturday, the 24th of September, 2022, and this is the weekly technical analysis for the euro, the cable, and the Aussie dollar. And as you can see across these three major pairs, the big drop for all of these three, especially the sterling pound, and which means we would expect the US dollar to have broken out higher, which we'll see in the US dollar index DXY later on. And of course, we know that last week was a very volatile and significant week with the Federal Reserve, FOMC, deciding to raise interest rates by 0.75%, 75 basis points as expected. This brought the rates to from 2.5 to 3.25 now. And with further expectation of another aggressive rate hike in November, could be another 75 basis points before they slow it down in December to 0.5%, and bringing the total to 4.5% for the year. So we shall see. That's the expectation from the analysts for now. And this is all in the effort to tame inflation, and the Fed's primary goal and focus is just to bring inflation down, and probably at the risk of possible recession. Let's begin with the euro dollar. And the announcement was on Wednesday in the US afternoon, and it had already was sitting before Wednesday, was sitting right on the trend line before it broke down. So it did fall right on the Wednesday, pause on the Thursday, and then continued its bearish momentum on Friday, right into the 162 pip extension of this reversal move, of this retracement, and then a reversal. So that's a very significant extension level. Whether or not that will continue this week, shall see, but that has already just closed below the 97 round figure, 0.97. And just shy of hitting the 162 fib extension at 96.57, 58. Low, hit a low of 96.68. So very bearish close there for the week, and that's the bearish candle. Very bearish candle for the week with this breakdown. So it could not climb up much higher at the start of the week. It was contained basically under the 50 fib retracement, and it could not close above that. And once it closed back down, looks like it was getting ready to break that trend line and continue the bearish move. You could also have this bearish continuation setup, and that has hit the 138 bit extension. So that's also possible. Did that exactly. And next extension at the 162 is moving towards the 95 If we go back to the reversal setup, that 200 pip target is just above the 95 round figure. So we can use either one here. So this week, we should expect a slight pullback. This will be the support now. And that pullback, we'll see if it's going to pull back to retest all the way to the swing low, where it fell through. Let's mark this as the resistance. Next possible support is going to be down to the 200 pip and just above the 95 round figure. And if it does pull back higher, it is possible to could climb back up to the 78.6. Good retracement, but that's likely going to be a significant resistance there. Okay, so it all the major pairs basically could not find any significant support as the Fed has been very hawkish and leading in the charge with higher interest rates. This week, there's only Eurozone CPI flash estimates, so no significant news, and it's going to be a lot of speeches from the central bankers. So we'll see how much consolidation and pause there is before any possible bearish continuation moves. It may not target the 200 pip here next week, but it is going to be still a falling knife, so don't try to catch that. We'll see if there's any significant recovery and look for opportunities to sell. All right. So let's also switch over and take a look at the US dollar index and how that has rallied. And here's the DXY US dollar index. And from last week, we did highlight the resistance from the 110, and on Wednesday with the Fed announcement, it shot through this swing high, shot through the swing high area and hit the 111. We did not mark anything higher than that, but it did pause. After a pause on the Thursday, it had a strong rally, strong push up on the Friday, all the way to hit the 138 pip extension of this swing move. So it has hit its first target, a very strong breakout there on the Friday. So following the Federal Reserve announcement, so the next area of interest would be the 162 pip extension, and that's just above the 114 area. Perhaps we can mark a 114 round figure. That's the next area of interest. This 138 fib is just at the 112, just under 113, so 112.88. And if we take a look on the weekly time frame, that's a very strong bullish candle there. Possible pullback, and could be an attempt to try to hit 114. May or may not hit the 162 fib next week. But we'll see how much bullish momentum there is from next week. Okay, so all these now resistance. Let's move this next area here to a zone. Oops. So from 114 to 114.34, that's the zone there, and support is already going to be at this swing high. That would be a support area, and for the next level down, this 109 and 786. It's going to be the next key support level. Can remove this for now. All right, so we'll see how much pullback there is before any potential attempt to break out higher, or whether it's just going to consolidate for next week, as it is the last week for the month. May not attempt to break out higher yet, but you never know. It could just go all the way. All right, so with no major US news, there are a couple of minor news, with the key one on the Friday with the core PCE price index. So that could also be a key trigger right at the end of the month, last day of the trading month. Okay, so let's move back to the other majors. Okay, let's move on to the cable. This is on Friday. You can see a massive drop on Friday of almost probably 400 pips on Friday, and that was apart from the trigger from the Federal Reserve. The Bank of England did announce their rate hike on Thursday with 0.5%, so less than analysts were hoping, and less than the Federal Reserve. So they increased their rate from the 1.75 to 2.25%, but there's possibility now that in November they could push up higher to 0.75 or even 1%. So we'll see what happens in November. But this major drop on the Friday was because of two set of news. First was the flash PMIs, which was really worse than expected, and probably looking at a possible recession already with the economy. And then with the budget announcement on the Friday, late Friday, on further tax cuts, a huge tax cut, the biggest cut since 1972. And that was supposed to help support the economy overall, but the sterling just gave way and collapsed all the way through below 1.1, and it did hit the 162 Fib extension of this swing move with a very bearish, strong bearish close, further worries of more momentum, more bearish momentum next week. So this is a very drastic fall. Last week it's already it has already set low records since 37 years, its lowest rate, and now it's even pushed down even more. So it's already nearing 10. Let's see this level here at 108. So 162 Fib stopped it at 108.60, around the 60 area or 50 area. So it's threatening to push down into the 108 and beyond, lower. So the next key support is at the round figure of 105. And then that coincides with the 200 Fib extension. So that could be a possible critical target there at the 105, around just above 105.17. So this critical area is could be a magnet to for the cable to target. And with no major news next week, we will see what the traders wants to target their levels at. So let's move this major support now into this area. It's a critical area now. Resistance is going to be just at the 110. That could be an interim level. That's about probably half of this candle here, but major support is going to be at this swing low where it broke down from. So that's going to be key resistance zone. At the 113.50 level, that was the previous week's low. And of course, above that is going to be the 78.6 Fib. That will be the major resistance. Let's add this as an interim support area. At the 108 and the 162 FIB. So that's a massive fall in the sterling pound here. And this has also dragged the other sterling pairs lower, pound yen, pound Swiss. All right. And of course, on the weekly time frame, that's major candle here with a drop of over 500 pips for the week, almost 600 pips range. Okay. Let's move on to the Aussie dollar. And the Aussie dollar was not spared as well, and it fell through the key support at its previous swing low. That was the previous low for the year in July. Fell through the critical support from the 67 round figure and hit the 138 FIB extension of this reversal move, just short of the 0.65 round figure. So similar as to all the other pairs as well. That was the Wednesday drop from FOMC, and then further weakness on the Friday with the boost from the US dollar index, which drove up higher and dragged all the other major currencies down. And below that, the next extension at the 162 FIB extension aligns also with the 64 round figure. So this is already key resistance, and let's drag this one down further. So let's mark this as resistance. All these can remove these for now. Next target here at 162. Okay. And on the weekly time frame, also very bearish candle. And looks like, yes, as with the pound, there could be further continuation into the next FIB extension level. All right. So do check out my other videos on spot gold and dollar yen as well, where there's also a lot of volatility with the Japanese yen, with the Bank of Japan's intervention. And there are some significant moves there with the yen pairs. So do have a safe week and a good trading week, and cheers for now.